live just a few minutes after 12 o'clock Eastern, about 10 after 12. And we're back with another edition of Chart the Markets. And I am Mark from House Technical Analysis, and I'm here with the ongoing support of my friends at FEG Token and smartdefi.com. They were my first initiation into this crazy crypto space that I sometimes wander into, and if it wasn't for them, I either would have been eaten by snakes or drowned in quicksand. So we've always been good friends. And our partner, BYDFi Exchange, BYDFi, they are an ongoing partner who are again offering two $50 trading bonuses to a lucky holder of a user ID from our House Technical Analysis link, which you can find in our Twitter posting, or you can even find on YouTube in the description at House TA. So let's go. Let's get into this. Way back on May 27th, I believe it was a Tuesday, we were in this very stream and we drew this horizontal yellow line. And if you go back in time to that stream, which you can find online, it's there. And we connected this simple level because we know that these support and resistance levels are important, and we know that current price revisits past. And many times we will start checking levels in and around the 5 EMA and or the T line in areas where we can connect price. And that's all we did here, with the simple understanding that maybe one day we would come back and look at it again. And we do. Not once, but here we are yet again, testing the very same levels. Now, these levels are just targets for us, right? But price is drawn to these levels like a magnet. This simple line that we drew, this horizontal line that connected, the wick of one candle basically at the top of an uptrend, the T line, and the wick of that candle on the 27th, is incredibly relevant. That's why we need to know where these areas are. And when we combine that with the other elements that we use in our methodology, like the volume profile, that basically gives us a ground, it's averaging price and volume, we can start to create simple trading ranges, right? And evidently, it's quite clear. So at times we refer to this grayed out section of the volume profile as a premium. Look how difficult it is for price to break through this level, this premium level, right? Nothing happens in one giant candle that's sustainable anyways. But this level is an obvious area of resistance, which means it's going to take some time to break through it. And you can see we took on the 27th, we made a run, and let's start there, we fail. We come back several weeks later, almost to the penny, and we fail. That was today's previous candle actually, which gave it a peak and pulled back. Now, are we still in a bull trend for this particular wave? Yes. We're trading above the 5 EMA and the T line. So, and we're still working under a buy signal. So yeah, we're still in a bull trend. Is this tradable? Absolutely. Look where you bounced. Right at the point of control. What do we know about these gaps? When we go through them to the upside or the downside, it happens pretty quick. And that's what happened here. Price went through it like it wasn't even there. This is kind of why we do this, right? So that we can slowly but surely try and figure out the direction of price, increase the probability of making a good trade in a safe trade. But it's very interesting to know, like if we didn't do this exercise a while back, we probably wouldn't be talking about it now. This is all relevant. We know that price will come back and visit us again. We know that within the volume profile, this is where it wants to be, and these are the extremes, right? That's a premium, that's a discount. How long did the discount last? 12 hours, essentially. Because in 3 candles, 3 4-hour candles, it was gone, right? And you're moving back up into the value range again. Right? And these swings up and down is what we want to trade. We don't want to trade the chop. We just want to trade the breakdowns and the breakouts. All right, now, something kind of interesting. Sometimes we forget about, like, what is a moving average? Right? Moving average is what? It's a representation of price, of price and time over a particular time frame. Now, what you're seeing on this chart is 1,000 days in amber. In 500 days, that's pink. Now, most of you, many of you, have never used or would never have even thought of using long-term time frames like this. And I understand that. But we believe that everything is fractal. These time frames are relevant. So when you see price bouncing off here, this amber 1000 MA, what is it bouncing off of? It's not just an amber line. It's almost 4 years of price history. 4 years. Now the pink line, being the 500 MA, is obviously just about 2. And if we believe that everything is fractal, and we bring up a weekly chart, what does this 1000 MA represent? How about 20 years of price history? This is about 10. Is that kind of relevant? You think it's relevant when you fail 20 years of price history? Anyone? Yeah.
Yeah.
Right? Absolutely. But most traders wouldn't even be understanding what they were failing. A, they wouldn't be looking at it, and B, because they're not looking at it, they're not taking it into their analysis. If you fail 20 years of price history, maybe there's a message in the bottle for you. So, if we look at this chart of oil, which we've looked at before, what's going on here? What did we test in and around our trend line that's proven pretty strong? Not that we're going to hang our hat on it, but we failed 20 years. There's our 6166 target. There's 10 years on the weekly chart in pink. And we've, here we are bouncing around between the two of them. So until we either have a further breakdown at the 500 MA on the weekly chart, which is actually 10 years of price history, all of a sudden it means something differently when you hear it in years. If you fail your breakout of 20 years, and on the pullback fail with support at 10, you got a problem. And it doesn't matter. This could easily be tiddlywinks. It doesn't matter. It's the chart. Are we still under a buy signal? Yeah, we are. On the weekly chart, it's right here. We still have the divergence up, but hasn't been broken to the downside. So, it kind of feels like you're a little bit in purgatory bouncing around here, but it's probably a reasonable articulation of what it does feel like, right? Because everyone is waiting either for the other shoe to drop, and the other shoe to drop is down into the 50s, or your breakout finally succeeds and you start trading above the 1000 MA, 20 years of price history with some meaning. But the context of time is important, right? So if we were to look at Bitcoin's 4-hour chart again, I want you to look to the left of that chart. What are you finding support at? 1, 2, 3, 4, 5 or 6 times. 1000 MA. But what is that? Yeah, it's about 2.4 years of time. 2.5 years almost. Does it mean something different now? First off, you can see it. Secondly, you understand what the context of time means. So on the 4-hour chart, you are actually getting repeated support at almost 2.5 years of price history, and then you got a significant bounce right back here. You literally wicked it. Not that it's pinned the tail on the donkey, but on that day it was. Get an immediate buy signal, and boom, you follow the yellow brick road. These levels mean something more than just flat areas that you see on your chart. What is that flat area? Right? What does it represent? And this same rationale applies for every moving average you put on your chart, if you're inclined to use them. But there is a message here, right? There is a message on our oil charts. We don't always like to hear what the message is, but there is a message, right? Look at all the support we got along the 1000 MA. Like, I think there's got to be 9, 10, 11 touches there. Over the, even if we go farther back, there is. It's 4 years of price history on a daily. And on the weekly, it was even more meaningful. Much, much more meaningful. 20 years of price history. Now, what is considered to be, like in commodities, for example, did you ever hear of 10-year cycles? Yes? No? Maybe? Now how do we spot them on the chart? 10 years on a weekly chart is your 500 MA. Do I pay attention to that stuff? Yes, I do. 20 years is the 1000 MA. is anyone, when they're looking at these charts and they see the consolidation along this level, are they thinking of it in the context of 20 years? No. They're just thinking of it in the context of maybe this is the bottom, or this is the consolidative area. They're not thinking of it in the context of 20 years, 2 decades of price history. It's just not how our brains are functioning at that point in time. That's why fractal analysis is important. This is a part of fractal analysis. We talk about time frames, going from the monthly to the daily to the 12-hour, 4-hour, and working backwards, yes. But we also need to understand what those moving averages represent in time on each and every one of those time frames, so that you can put some context behind what you are seeing on your chart. 20 years of price history as support is meaningful. Failing 20 years of price history is also meaningful. But no one's thinking of it in the context of time. We're just looking at it from the context of, hey, that's consolidating, so that must be a buying opportunity. Yeah, maybe. But what if that buying opportunity turned into a 20-year failure? That would kind of suck. Part of our job is preserving the capital, if not the job. So understanding that, to me, is important. Because I don't want to fail. I don't want to be on the wrong side of 20 years of price history being failed. I don't want to be on the wrong side of that. Because how long do you think it's going to take to get out from under that hole? Too long. Sometimes the best trades are the ones you don't make, or you make it to the short side in this case. Understanding what these levels mean outside of just being consolidative areas of support and resistance or whatever's going on in your chart at the time. They mean something. You know, on the 1-hour chart, your 1000 MA, which is way down here, is 0.6 of a year. So over half a year. This would be half of that. The 500 would be half of that. Third of a year. Are we ranging? Interesting, isn't it? Does it add a different kind of context now to how you look at the chart? It does for me. And it's just one of the little tools and rules that we have to help us make good trades. And we were talking a little bit before about, you know, online, before we came on, about let's just follow the rules. And what are the rules? Right? Well, let's remember that current price revisits past. The first attempts typically fail. We like to buy at major moving averages, and if we get to pick, it's going to be the 20 or the 50 for me, but I prefer the 20 and 50, but I will certainly buy at any major moving average. We know that when we break one level, we find the next. And we just continuously rinse and repeat a few basic things, and we add in a volume profile to tell us where the money is and is not, or has been and has not been. And we just continue, and this is what trading is, right? This is what trading is. It's just the ebb and flow of how price moves on the market. And what we're looking at on our chart just provides the guide rails. Isn't it interesting where on the 4-hour oil chart, this level, it does not like it. Here's your 1000 MA. Look at your 500 MA. 1.2 years, 2.4 years. That's what that represents. And it's much more meaningful to me when I have these longer time frames, averages on my chart. Because again, it's all fractal. I don't like to get much below the 15-minute or an hour on this kind of stuff, but it's very meaningful, especially on the longer time frames, because you have to understand, are you trading in a cycle? Are you trading at the end of a beginning of a trend? Again, that's meaningful to me. So understanding what these levels are on our chart is incredibly helpful. On our daily chart, let's remember that this 500 MA is 2 years on Bitcoin when you see it. That's 2 years of price history. And if you come back and meet it, and obviously there's 4 years, right? If you come back and meet it, you'll know that it's relevant. So always, if you believe in fractals like I do, and you're using these longer term time frames, don't forget what they mean in the sense of actual time, because it does change your perspective on what you see on the chart. And here we are on this 4 hour. I just want to point out, don't think that this level back here didn't mean anything. We pointed it out right on live on air. This will mean something to us in the not too distant future. Boom, and here we are again. So what does that tell us? If you break out of this, what is it, 110.7, what are you going to want to do? Well, first off, you're going to want to take out the previous wave's high at 111.7, or somewhere up there. And then you're into complete and total price exploration all over again. But it's all about the levels. And on the way down, these levels will be equally as important. And we will probably come back a few weeks, a month, 2 months, who knows how long. And we might be having this similar conversation about this very same level, but as support, as price pulls back. If in fact it does break out in this wave. So I'm pretty sure that we'll be having a conversation again about this level. And that's quite often why I leave them here. Like you'll see on the charts, I may have certain levels that I've identified that I just leave on there because I know that one day we'll have to come back and I'll be having to make a decision about something, and I'll be glad to see it there, because it'll be a reminder of what I was looking at. Okay? You guys have any questions on that? And if you want to figure out, what each average that we use, because what do I use? I use the 500 and 1,000, a 20, a 50, a 200. Sometimes I use the 100. Right? Sometimes you won't see the longer term time frames on your chart because there might not be enough price history. That's okay. But they'll show up when they can, when the price history supports it on a time frame that does. And those become ranges, those become our targets, break one level, find the next. If we fail up here, what are we going to want? We're going to want down here, the 20 and the 50. Because we know that price doesn't like to get too far away from the 20 like it did here. Right? And treats it like a magnet for a while. So when price gets parabolic or a little exuberant, and you're trading above, the 20, the 50, and the 200, you're going to want to look for a pullback. Are they complete and total fails every time? No. Why did this one get some love? It's the first attempt. So it was getting some support. A little bit of a breakout, and then it actually failed it down here. So that's why we use these. Right? They are representations of time and price. And if you want to find out, well, geez, what does the 50-day mean on the weekly chart? Well, then just do the quick and simple math, and I can show you how to do that. But I just find it particularly important with the longer term ones, because when you start talking in years, like decades, then you have to take into account long-term trends and cycles. And these will help you figure out or have some understanding of what might be going on, which is part of the reason my conviction has been strong with oil. It just is. Like I said, until on the weekly we start trading above 1,000 days, then yeah, it probably means something. But it's just not happening on the daily yet. There's a long, long, long way to go, even to get to the 500. And on the weekly, that's probably even a bigger haul. Interestingly enough, if this fades, so what do we notice about using our methodology with the T line and the 5 EMA? Well, this nasty impulse candle down created obviously some momentum, which created the divergence here, and quickly, but it never closed. So what was it? We talked about this. What's the sign of weakness when you have this impulse down and then you go sideways? Look at these wicks. They can't break the 5 EMA. And these candles have still yet to do it, and we know that the 20 is up here. And is this the first touch of the 20 since broken? Yes. Is there a higher probability of a failure? Yes. Are we failing it? Looks like it. But we're still working under a sell signal. Right? And this is where, what we've done with our script here, giving us an early entry. Right? So if we really, really, really felt strong that this was an absolute breakout and you were hoping to catch, a bottom-ish, this is sensing that there's money coming in. That's why it's gone from red to white. And conversely, when it senses a fade, it goes from white to red. However, you notice that you don't see a break in here yet. You don't have a buy signal. So you have to understand that this is typically the insurance we would pay. But if you're going to cheat with a little bit of risk certainty that, hey, this is a potential failure, yeah, there's a trade there. But don't build a portfolio on it, because we're still working under a sell signal. And if we have this impulse down, we go sideways. We've seen this before, sideways back to the 5 or the T line. You get an attempted breakout that fails, you roll over, you take out the previous wave's low, which is this, right in here. And you've got the 50 at 63.88. And it would provide on the daily some support, you would hope. But if this fails, you look for price to come back and take out the previous wave's low. We'll deal with what happens once we get down here. And that's on the daily. And you can see on the weekly, we're just ranged. But you can't take any breakout seriously. This could be Bitcoin, this could be FEG, this could be a treasury, this could be ABC company. I would interpret things the very same way. Don't you find it ironic? Look where price closed on this weekly candle. It closed at 20 years of price history. Why? Because I believe that someone else is aware of where they are on the chart, and they're like, sorry dude, I'm not going to be the one to walk across a 20-year line. Not today. That's not going to be me. That's a lot of resistance, and there's a lot of stuff that's got to get figured out before I'm willing to do that. It's like the start of the high school dance. Who's going to be the first one to walk across the floor? That's what's happening here. And guess what? They couldn't figure it out. So what do? You sell off. I don't care about what's going on in the world. It doesn't matter to me. All that matters to me is what's going on the chart. That's it. Now, when stuff does go on in the world, especially with oil, does it show up in volatility? Yeah, that's what this big candle is, and these big candles. But the ranges that we have are still there. Just spreads them out a little, that's all. But it doesn't change the fact that this is 20 years of price history. What do you think this is? This is a monthly chart. 41 years of price history. So, where did oil rebound after it got kicked in the teeth and had that little negative experience, right? Right here. Somewhere in and around 40 years of price history during this month. Is that bullish? Absolutely it is, right? A green candle at a major moving average, especially a long-term one, yeah, that's bullish, man. Until it isn't. And, as you can see, no one can tell us that we didn't have a clue, regardless of the time frame we're working off of. Now, in all fairness, this is a monthly, so there's a lot going on in this candle. But the 5 EMA on our script sensed the fade at whatever that was, 115, 2 equal tops. Hello. Chart was telling us it sensed the fade, so you can either take the short or get out of your long, whatever you want to do. But you knew that when you broke, you were going to come back to the 20. We talk about this all the time, right? But you don't hold, so you break one level and you find the next. And through this whole thing, notice that the T-line and the 5 EMA were completely diverged, giving you strong sentiment to hold your short at least to the 50. Right? Now, you wick it here, but notice that you don't break. And then here we are, most currently. Here we are, there's the 20 MA, that's based off our trend line on the monthly chart. So this just gives me more reason to believe that this, and I don't want to spend all day on oil, 72.33, that this 1,000-day MA on our weekly is a big deal, because this is basically the 20 on the monthly and the 1,000 on the weekly. It's all, this is relevant because it's also our trend area, right? If you break there, you're going to start to look for the 50. Break one level, find the next. Doesn't matter up or down. However, let's just keep in mind that you're still operating under a sell signal where you have divergence that's still intact. This is what we do every day. Nothing really changes the way we look at any chart. But it's really important to understand what those levels mean when you see them. Doesn't matter what you're trading. They are still going to be relevant. Any questions, guys? Now I know, Mike, you're in here. I know you have one.
Yeah, I'm here. Yeah, no, I'm not. No, I'm just funny because um I'm just watching really. I'm already in my oil trade. I've been holding that position. Um, sticking to, following the trend lines,
Hmm.
the moving averages. Um, has like I was about to close it, but I heard you in the back of my head, like telling me, Mike, are we still in the trend? Yes, no. So
So, that's interesting, Mike, because we talk about, and I don't know what time frame you're looking on or anything like that, but we talk about trusting our charts, right?
yeah.
And that's an easy say, but a hard do sometimes.
Oh,
And
100%.
and I acknowledge that because I struggle with it just like everybody else does. Like I'm a human being too. I'll see things that might seem completely irrational, but you know, what do? You have to believe the chart. And if you're trying to find a time frame that's less choppy, but I think this is a real good
So
example. Like,
yeah,
you
because
know,
I entered like
this is
um
still in an uptrend, right? Like on this 4 hour chart, if that's the time frame you're trading, and you know, if you're not overly leveraged and things like that regarding whatever the asset is, on a 4 hour you should have lots of time to wait this out. But what do you think that the resistance to the upside is here? 67.90 on this time frame. Getting tons of support, which is the equivalent of 1.2 years. 500 MA on the 4 hour is the equivalent to just over a year. And it's obviously meaningful. You're hitting it to the penny and closing basically right at it. If we break here, what are we looking for? Again, the 20 and the 50. So you just have to allow yourself to go through the ebbs and the flows and not get married to what you're trading and the direction that it's going in. And crypto traders are probably famous for this. Right? You just have to follow the chart. Don't let your mind, like, if you have to remember, are you an investor or are you a trader? And yeah, there's kind of a difference. The way that you manage what you're doing on the chart is different. How much leverage you're using might be different, if you're using any. This is XRP, and there's just a reason that I'm showing it. Because XRP is kind of like the one to me that a lot of people want to own, and a lot of people love to trade. So, it's kind of bringing the best of both worlds. But I'm showing you this chart because the daily down here is doing what we talk about all the time, right? This would have been painful as a trader to deal with this, right? Because it's going nowhere. So to a trader, that's dead money. To an investor, that's an accumulation opportunity. I get it, right? Makes sense on both sides. And there's your massive breakout. Now, if you're an investor, you're super happy because that's the moment that you've been waiting for the thing to finally take off and get some traction, right? So everybody pats themselves on the back, and that's where you put a lot of time and capital to get there. The trader, just says, well, I'm just going to do what the chart tells me to do when it tells me to do it. This would have been a beautiful leverage trade. I hate to say it, but it would have been. And then you go flat. And what do we think is going to happen when we come out of the flat period yet again? Kind of like we did down here. Probably have another significant move either up or down. But there's lots of tradable moments within XRP, right? There just is. One of the things I notice about the weekly chart is that, let's say, so quite often when we see this, we're expecting a complete and total rollover, right? And it would make sense. You've had this parabolic move higher, things got, which would feel almost like they're out of control. But when price doesn't roll like you think it rolls and then starts to go sideways, that to me is actually bullish, right? So this to me would have been another area of consolidation where you have an opportunity to accumulate before another big move higher. And I'm not saying that because I know XRP has a lot of narrative behind it about it being used for financial transactions in this new world and all that. It's not why I'm making that statement. I'm just saying from a technical point of view, when you have something that goes parabolic and it looks like it wants to roll over and then just go sideways, that's usually a staircase up, right? Up, there's your step, and then you go up again. And when we go up again, taking out the previous wave's highs. And from there on, it's more price exploration. But this never really rolled over. And again, that's why we do multiple time frame analysis, so that we can see these things on over a longer time frame, right? So that's that.
Hey, Blunt,
Yeah.
would you mind repeating that last point? If it looks like it's about to roll over
Yeah. So
and it goes sideways, it's
yeah. So when you see this
yeah.
is kind of what you're going to look at. Let me just make some space here. So I would be waiting to see a sell signal show up here or whatever, right? Like you slam down and you hit the 20. You're going to try and front run the chart, probably a lot of people would, and it just went sideways. Like, yeah, you got your sell signal, but you notice how you never made it to the 50, right?
Yeah, the 50 is that teal line down there?
The blue one, yeah.
The blue? Yes.
So,
I got you, yeah.
So, and this could be a 4-hour chart, a 15-minute, it wouldn't matter, but, whenever I see that, which looks like a big giant rollover, and then it doesn't happen,
Yes.
right? It doesn't break down. Like, yeah, we broke one level, but we didn't find the next. So usually that's telling me that's just an accumulation. And then, right? And
waiting for that next stair up?
Well, it kind of feels like time and price are just waiting, maybe for the 50 to come in here too. But that's
push it up.
Yeah, it just doesn't feel like it wants to roll over. And yes, like there's your staircase, right? Flat.
So
up.
almost like I think you mentioned before, like a coil spring.
Mm-hmm.
How it's just starting to roll up. Accumulation.
Yes.
That's what that phase is.
Yeah.
All right. Cool. Thank you.
Like, here's BNB too on the weekly.
There we go.
Let's see if I can find another chart.
Big
Of
to me.
let's use the finance chart because there's tons of. There we go. So again, we never really broke down. This is the weekly. Interesting level to we're at, though, isn't it? So look back here into 2021. We're essentially at the same level, and
it looks like last week. What is that? The weekly? Last week's candle. Can't tell 100%, but maybe it does not have a wick underneath. That's kind of.
No, it's pretty solid. Yeah, it's pretty solid right at the 50. So.
How are parabolics?
I don't know. Let's look. Oh, that's not it. Where am I looking? There we go.
Ayo.
So if you're on the weekly, this would be your first. Well, it's Thursday, so there's still time left, but. If this was closed, this would be your solid green candle with the parabolic beneath price.
So that's 2 out of the 3. We would just need that 5 crossing above the 8.
Well, it already has. Like, so you're still on this chart, you're actually still working under a buy signal.
Good point. Thank you. Okay.
So
I see that.
You're still operating under a buy signal. You still have the divergence that we talk about between the T line and the 5 EMA. And notably, you have the support of the 50 here as well, and the 20, but you can see you've wicked it and moved up every time. So the only next thing we can look at is things like our stochastic RSI, which is, you know, it's not telling us too much yet. This could be a move. You have your move down, then you get a slight retracement, then a move down again, but
Hmm.
it hasn't
Not too.
shown
Yeah.
us anything yet. The fish are still diverged down, so. But you just gotta trade like, you just gotta do what the chart tells you. This is a buy candle, so you've got a stop in place to mitigate your risk. So if it does go sideways or south, you're not gonna get
Yeah.
take on too much pain. And and if it runs, well, there you go.
Yeah,
You're in the
but you got to
goods.
keep in mind, just looking all the way back to the left, like you said, we're at the, it's kind of cool to just get the big picture. Um, for sure, we're
Zoom
at the
in,
all-time highs, and
yeah, zoom in, zoom out, do whatever you think you need to do to get a better
mm,
look, or a look that makes sense on the chart. So, um, if we use, let's go back to Bitcoin for a second. So, I like time frames where the 50 is in play. And this is why. Right? So we talk about why is your 50 MA light blue? It's because it represents ice. Fall through the ice, like you do here, makes it really hard to get through the ice again. This is an ice hole failure, as I was taught by my teacher, right? And
okay,
what we've done with our scripting is that, so yeah, I would be looking for that, but now I look for this, right? I have a confirmed sell signal on this time frame.
okay.
Let's just look at what we would be looking at. This is what
All
we would
right,
be
now
looking
we're
at on our
now.
chart, okay? So we would see this big move up. We see that prices started to roll, so we know we're trading above the 20, the 50, and the 200. So at the
There's
very
cross
least,
on
the very
the
least, we're going to look to come back to the 20, because that's kind of, think of it as the equator
magnet.
or the magnet, yeah, right? So this was an easy one to detect that you were going to do a little bit of a rollover, but nevertheless, there's your confirmation. You break the 20, divergence is still intact, so you've broke one level, you're looking for the next.
Oh,
What
and some.
happens? Yeah, and when you see a candle like this that breaks through a level, like the 50 in this case, that's meaningful, right? Just like it's meaningful that you got a nice green candle off of it,
Hmm.
it's equally as meaningful when you split it in half like it's not even there. And again,
Yeah.
we went sideways, we didn't go anywhere, and here we are. Rinse, repeat, right? There's our resistance again, and again and again. Great example of what we talk about all the time. This candle would have probably stopped a lot of people out, or maybe just scared them, right? Like, I get it. Had a great run,
Which
consolidated
one?
for this candle would have scared a lot of people. Right?
Okay,
Let's say
okay,
you
yeah.
were short. Okay, you had a little bit of a nice run down, and you go sideways for a while. You see this
Oh, yeah.
candle, and you're like, I'm out of here.
Eesh.
However, if we take our candles off, and this is again, how do you trust your chart, right?
Interesting. It
There's no
never
break
crossed
here,
over.
right? There's no
Yeah.
break here. So that's one thing that you kind of note to self, all right? There's no break. The next candle, equal tops, right?
Mm.
So
Yep.
at some point on this 30-minute candle, if I felt very strongly that this was going to be the top of it, I'm going to re-enter my short. Or if I'm not already in one, probably enter one. Because not only did we not break Um, the T line. Now, what happened? Look at the divergence, right?
Oh yeah.
This is your money. This is telling you you're good, right? So, the breakout candle failed. The next one has two equal tops and shows you the divergence that you need to have confidence to go short or stay short.
The bearish divergence, right?
Yeah,
Yeah, when
that's
they spread out like that.
between the T line and the 5 EMA. Right?
Wow.
Now this is just nonsensical, and that's one of the things that happens in shorter time frames, right, with crypto, and there's not much you can do about that, but it happens, and that's why you have to use stops,
Yeah.
right? Like, I know you feel like you're invincible sometimes, but you're not. You're not bulletproof. It takes 5 seconds to get wiped out, or to have all your profits taken away, or whatever the case may
Oh
be.
yeah, and it's exactly when you put your phone down and you're not paying attention.
That's right.
It's gonna find its way to your price.
That's right.
Yes.
Don't make a sandwich whenever that happens. You know, everything's looking good. You come back and it's all gone. Right?
Oh man.
So, like, it takes 2 seconds. And what level, like, if we're working here again, like, I love these areas for stops. Right? So, as soon as you're realizing that that's your top in this 30-minute candle and you're entering, yeah, this
Mm,
area would probably be a stop,
okay.
right?
Yeah.
But, but again, to reiterate, use the stops. Like this, what we're doing here is not just teaching you how to read price on a chart, it's protecting you as well. Right? You can make all the money that you want to make, but you can lose it just as quick, and that's not what we want to
Risk management,
yeah, that's not
right?
what we want to see happen. So use the stops.
I think that's my next course I'm gonna enroll in is the risk management. I'm trying to learn the candles and moving averages.
Yeah. Well,
But
we'll work on that stuff.
no,
We'll
this is
talk about it.
key.
Yeah.
Just yeah.
Why do we use different
You
time
wanna-
frames, guys? Here's the point of control on the volume profile. Like, this is our 110.7 level that we showed on the 4 hour. Here it is on the 12 hour. Wick, pretty much wick, right? We're still bullish, and we're going to take another run at it. But look how
Yeah.
relevant this level is. That's a big shelf. And if we come back and test the POC and fail, you're into a gap again, right? And then you got the 200 down here as a target, and the list goes on.
Oh wow, yeah, they're all coiled up
So,
top.
but you can see that this is a consolidative area, and there's a decision being made, like who and when is going to take it above 110.7. That's basically what this is all about, and this is just a matter of waiting.
So far, so good, right, bro?
Yeah, whatever comes out of this will be significant.
The green buy signal under that first, you see the bullish divergence. Your solid, no, it's not a solid green, but it's holding above the 5 and 8 there.
Yeah, it's really like, so if we're, I encourage you to trade longer time frames, you guys, when you can, and let's just use the daily as an example, and let's find stock. Let's just use Apple. It's easy to get kind of lost in the weeds of analyzing what to do when, right? And this is a real good example of the doing what you're told part. So if you're trading Apple, it's only in the last 48 to 36 hours that people have been talking about in the last day or so, because it had a bit of a move. But when did the move actually start? It started on Friday, almost a week ago, right? When did everybody get excited about it? Here, obviously. But when did you know it was going to happen? Back here. Or if you were running our script, our script sensed, the 5 EMA sensed on that shorter time frame that money was coming in and gave you an early opportunity to jump in. Right? Not here, not here, not on this day, but way back here.
Are you saying to buy in by that doji right before that green candle?
Well, the opportunity, so this is your confirmation, right? And we kind of believe that this is what we're going to pay to make sure we're correct, which is true.
Wow.
However,
Yeah.
I am the type that appreciate the earlier entry, but I don't always
Okay.
want to take it, right? It's a calculated risk. But when
Well,
now I see it change colors, because this is how I'm getting that, that early insight
right.
that maybe something's going on, I have the choice. It's my choice to determine whether or not I want to take the trade down here, right? Or as opposed to waiting up here. If I take it down here, I will guarantee you that I will be well aware of what happens here at the 20, because if I get a big rejection at the 20, I'm out, right, on this time frame, because this would have been the first attempt, which kind of did fail a little
Yep.
bit. But if I'm in down here, I'm prepared to wait, because I want this thing to open up for me, which it did in this case. But
Oh yeah, if you would have rushed that trade, you would have been
so just
just
be aware.
very
Yeah, like
yeah.
you're looking to fail the 20 here, right? If you fail the 20, you're out big time, because it's gonna chances are it'll reverse hard. It didn't. It gave you a buy signal, and there's that divergence that you want to see to the upside, right? See, that simple stuff, right? There's a little bit of resistance at the 50, because why? Because it's the first time that it's seen it since it broke it on this time frame. Right? Doesn't get a total breakdown. Look, you have 3 red candles. Everyone's like, oh, that's it, it's over. No, still intact, right? Yep.
Wait a minute. Now with the first test, oh, that's the second test of the 50. It looks like it broke through. Typically, the first test would also fail, correct?
Mhm.
Like the 20.
Yeah. So
Yeah.
what you see here is just sideways trading, right? But it didn't break down. This is kind of what we're trying to show, like we showed on the other chart. You thought
Right.
it was going to roll over at the 20, but then it didn't. Well, look what happens. You move up, you go sideways. Didn't break down, and in fact,
Step up.
snaps up, right? And look at the momentum here. That's what this divergence is telling you, is that there's momentum in this move higher. The wider the spread, the more momentum there is. As it gets condensed, like you see here, and consolidating, right, there's no momentum in this move. There is here. Okay? But you'll see these things unfold on the 4-hour or the 1-hour, if you're looking at the daily, to give yourself a little bit of a heads up that something might be happening. But again, this was a nice move off of here, but this was your early entry way back here. So everyone's talking about the move over the last day or so. But when did it actually start? It started on Friday. Right? Our charts were picking it up on Friday.
Yeah, that's powerful. The white, the red EMA switched over to the white at that point too. She's showing the money flowing in.
Mm-hmm.
That's the Blumhouse indicator.
This is, yeah.
That's awesome.
So do you remember how we showed on the 4-hour Bitcoin chart that you got support at 1,000 MAs, which was like 2.5 years almost?
Oh yeah.
What's happening on this Apple chart? That is 2.5 years. That amber
And it's a
line.
nice breakthrough, huh?
Yeah, so that amber is 2.5 years. Okay.
Look at that.
So when you put it into the context of actual time, as opposed to XMA over a certain time frame, it does change things in your head a little bit. At least it does for me.
Yeah.
So here's Apple's daily chart with everything up. And on the daily chart, what's this? This is 4 years, right? This amber 1000 MA on a daily chart is 4 years. 2 years.
So it has support. Hmm.
So where did your bid come off of? Came off at 2 years worth of price history. Whoops, way back here, back in 24 of April. So yeah, so when I see it on my chart, I'm saying to myself, okay, that's the 500 daily. But I also think about it how much that is in actual years. It just helps me
Yeah.
put some context behind what I'm looking at. That's all.
And then
So
that would help me be a little more patient, I would assume, right? Like it's,
yeah,
hey, we just got to make sure which direction we're going.
that's right. That's what it's.
And that's what we
That's
love
why we
them.
do this. It's all, it's just directional. I love this when you start to see all the averages twist together, because whatever comes out is usually somewhat
Volatile.
volatile and has some juice to it. But what do we know about this chart? So if we walk back these candles, we know this is our volume gap up in here, and we're saying, okay, if we get a bid, we're going to push the volume gap because we know price can move up into it quick, which we're doing. What would be our target? There's the 200 as one. Here's the upper value range and a relevant trend level. And the point of control, as we know, is the densest, most stable shelf we have. Right? That's what it represents. It's the largest point of averaging time of volume and price.
This marks the spot. Yeah, right there.
So those would be our targets. Right? We twisted a whole bunch and took off. There's only one up here as a target. And how are we going to tell if this unwinds on us? Well, we're going to keep an eye on the shorter time frames. Right? You got to love, again, that green candle at the 50. Love that stuff. So
Yeah.
what is it looking for on this time frame, which is the 4 hour? Probably the 500 MA, which is going to represent 1.2 years. That's what it is. It's 1.2 years. That's not all that far away. I think it's a reasonable target for it to have. And it's just level by level, right? You catch a bid, you're saying, okay, geez, if I can get past this, I'm great. Well, you do. And you just start traveling up the T line and the 5 EMA, and all you're doing is following. When you see these impulse candles, you expect at some point you will want to come back and test the 5 EMA and or the T line. And then if you break those things, or maybe you see your 5 EMA go red on you really quick, well, then you know you're pulling back. Where are you going to pull back to? Another level of time and price. And you don't think that, years on a chart, it's over 2 years on a 4 hour, is a relevant place for it to pull back to? Yeah, probably. So again, the context of time, I think, is important. So, any other
Can we
questions, guys?
I just wanted to just have a look at gold.
Sure. We like gold.
We like gold.
Where is it? Where are we going? Way up here.
So we are currently so on the daily, it looks like we're kind of trading between the 20 and the 50.
So on the daily, you're kind of in an interesting spot here.
Yeah. Because everything is still saying option because we're above the 200, both in terms of the 50 and the 21. And we've hit like what support level was 450, I believe.
So I've just switched to GLD, which is the Spider Gold Trust, because I wanted to be able to throw up a volume profile. And sometimes commodities don't like volume profiles when you put them on your chart, and they just show you this massive grayed out area. Sometimes a shorter time frame might allow it to show, but GLD does because it's an ETF. So here's where we're at. You're trading basically right now at the point of control on the daily, right?
Yeah,
All
yeah.
right. Um, this is a big gap, Mike, to the
Mm,
downside, and the lower value range is essentially right at the 200 MA.
yes, sir.
Okay, so that's kind of your downside risk. If this rolls over, that's you start looking at the previous wave's low, and then from there, like it does put you into that gappy area. But let's look at a shorter time frame here, see if we can figure out anything else. So we've failed the 50 on the 4 hour. Point of control still not far away. It's not going to tell me much.
There's another 200 on that 4 hour, isn't there?
Right, right. So,
Mm.
looking at the 4 hour,
Mm-hmm.
yeah, point of control is showing at 3349 or 3350. But we've broken past the 200. I think we're rejecting off the 21
You're
because
looking at.
sort of like there's a crossover between the 21 and the 50 and the 4 hour. But ultimately, I think we're just trying to find the 200, get a right
Yeah.
rejection from there.
Well, so okay. Change of opinion. All right. So
Mm,
I think this. I if you fail the 50 here, right? If you don't find support on the 54 hour, this could get slippery. I don't like the stochastic RSI here on this time frame. I don't like the MACD, right? So when you're trading above the zero line, in your moving average and signal line are above zero, you're kind of in a world where more bullish things can happen than bearish, right? But at some point in time, when these things do reverse, they do it either gently or all at once. And I don't like this kind of look here, right? I don't like the histograms dropping off really fast. I don't like how the moving average and signal line are really arcing quickly. I don't like that. So that makes me feel a little bit bearish still. What you want to see is that it holds the 50 on the 4 hour, because what's going to give you some insight to what's going to go on the daily, that shorter time frame. Sorry, I got to take the volume profile off. Right, so again, the 50 on, it's basically the same level here, 33.21. You don't want to fail the 50. You've already failed it once. If you fail it, you're going to come back and take out this previous wave's low at a minimum,
yeah.
right? So you get a little structural at this level here, 32.31. You don't want to break that. If you start to break this, it could get a little sketchy. But it's, again, are you working under a sell signal on the daily? Yes. Is the 20 obviously a problem for it? Yes. So this is the first attempt. Does it look like we're failing it? I don't know yet. We're going to find out. But you just don't want to fail that level. Longer term, it's a little more clear.
Yeah.
Now, this is why we do multiple time frames. Because when you look at the daily, you're going, oh, it could get really ugly on the way down. And that, it would be totally legit to say that. But when we look at the weekly, what do we notice? We notice that we get continuations off major moving averages. Continuation. Is this pullback just another continuation? So in other words, are we going to do, we're going to pull back, get to the 20 in here, and then work our way back to test this level to go on and make new highs, right? So it doesn't necessarily mean when we see these pullbacks that we're completely losing and rolling over. This could just be a reasonable retracement to kind of catch our breath and then go on and take, run to take the previous wave's highs. Right. On the weekly chart, I'm more inclined to say that. I don't quite see I don't like the stochastic RSI and all this stuff, but we just look to see if we get support at the 20. And if you fail it, what do you think happens? Because you have tested it several times, and if you fail it, look for the 50. Not all in one candle, but price just kind of works its way, right? Don't get too, it's easy to get into the weeds, right? You want to get into the weeds, let's talk about currencies and interest rates, right? Stuff like that. And you'll start spinning and spinning and spinning and not being able to make sense of anything. Just follow the chart. Doesn't matter what the time frame is, whether you're trading long or short time frames. The chart will tell you. Like this gold chart is pretty darn easy. Oh, there's a buy signal. Even if you closed your trade, you would have opened it the next day just by doing what you were told. And you would stay in it until you were told not to be. And then a few weeks later, boom, you're in it again. That's not that hard. You just have to be trading the right asset. Or trading that right asset on the right side. That's all. It's as simple or as complicated as we want to make it. Right? We can make it super complicated if we want. Or we can keep it really simple. Let's just keep it simple. What's on the chart? 500 EMA and the 1000 EMA on a monthly chart of the 10-year Treasury, which are U.S. government bonds. Now, someone who I like to consider a friend of mine, I know a lot of you know him as well. We're in our Telegram, we talked about this, but except way down here, saying, geez, I hate to say it, but I think the 10-year wants 5%. And we're like, you know what? I agree. And it tagged it.
Nice.
But did it completely capitulate? Remember how many charts have we looked at where it had this big move up and it looked like it was going to roll over and then it just went sideways, and then what happened? Boom. Let's have some fun. Where's the 20?
Wow.
Oops. Ha. Shit. All right.
Is it on this money right now? Yeah.
Basically. So, going back to what we were talking about before on that other chart, does that look like a total and complete capitulation, like the sky's going to fall? Yep, it does.
Yeah. Oh, I'm sorry.
This sure does, right? But here we go.
Okay.
There's our, remember what we talked about? It looked like you're going to roll over, and then all of a sudden, you get some love, right? Get support off the 20, and here we are now, without completely rolling over. We've just gone sideways, just like that, I think it was 4-hour Bitcoin chart maybe. And do I still believe that it wants to take yet another run at these levels? I do. Because the chart is telling me that. The way I interpret the chart is telling me that. I don't care if someone doesn't believe me, or we're not on the same page, or they have a fundamental rationale that completely chews up what we're seeing on the chart. That's fine. Trade your lights out on it. I don't care. It's not my money. All I know is that this damn thing on the monthly chart did not die, is still bullish, and I think probably wants to take another run at these levels. Now, it's a monthly chart. It's not going to happen in one candle. Could be another 6 or 8 months away. But this is still a target. Right? We don't know what
Yeah,
comes.
something.
We don't know what comes after the current candle that we're looking at.
Unless it fails at 20.
You know,
That's a different story.
here we are on the weekly, fighting the 20. But what did we do on the weekly chart for the 10-year?
Blasted through the 20.
We did. We went through 20 years. 20 years.
Yeah.
Of
That right
rates.
there is like a confirmation that it could be looking for. There I go with trying to front run it, but 20 years is a big deal.
So
You
do you
break
remember?
through at that point.
Yep. Do you remember when we had David Nikoski in?
Yeah.
A couple months ago. I suggest if you don't follow David Nikoski on Twitter that you do that, because you will learn and realize things before most people. Back to the left of this chart, ages ago, which is back, let me just get the time, back in 22, this thing broke 10 years of history. Interest rates. Okay, interest
I see that
rates.
line.
Right?
Yeah.
The government bonds broke 10 years of history. And then, a couple months later, break 20 years of history. Now, I know David a little bit, and I know that when he sees like that, he'll scream it. Stuff like that, he screams it from the rooftops. Why? Because it's relevant. Look how long you have stayed above 20 years of price history.
Not just how long,
3
but
years
how
now.
far you've went past it. The percentage at which it went up is pretty extreme too.
And you gotta understand one thing about Nikoski. His history is bang on because he goes back further than we could ever imagine, and he correlates it from a standpoint of many decades. You know what I mean? Like years and years.
Yeah, like that guy has more history than I can actually access on TradingView.
I got to make sure I'm following that guy as well.
But
yeah, David Nikoski, he's probably one of the best out there. Most underrated guy out there.
So, does he also focus on the moving averages like we're discussing?
No,
like that's
David actually, and we'll have David back into the session in the not too distant future, hopefully. And David bases his analysis more off of relative strength, right? So, for example, if you take a sector that you think let's say it's technology, and you might think that by trading what you believe is the biggest and best company in that sector or in that grouping, that it's the best stock to trade. That might not be true. David will look at the relative strength of everything in that sector and will make decisions based off of that. In other words, there might be a smaller, less known entity within that vertical that maybe you never even heard of, but is better return than the usual suspect. Right? So, and that's that's the magic of what he does.
If you want his on Twitter, it's @Dave Vermillion.
Let me jump over this. Sorry.
Hey, Butters.
Hey, buddy.
So when you see this, amber line, which we talk about as 1,000 MA on an X time frame, but now you see the 1,000 MA on the weekly, and you go, holy crap, that's 20 years? We failed 20 years, or we broke out of 20 years? Yeah, we should be talking about it. Guess what this is? Guess what the amber 1,000 MA monthly represents? Anybody? Anybody got ChatGPT open or something like that? It's 83 years. Yeah. This is 40 years. So 500 MA on the monthly is 40 years. 1,000 MA on the monthly is 83 years.
A
Right?
lot of data, man.
So, do you see this back here? This is here for a
Double top.
reason because I believe that we're going to visit it again. This double top up here that failed back in '07 at 83 years of price history. You got a double top. You got to have
And what?
a lot of conviction to break through 83 years of price history, right? This is what you would have been looking at.
Some people are asking about David. It's David NICOSKICMT at Dave Vermillion VERMILION. Sorry to interrupt you there.
No, it's okay because I'm not actually looking at the chat. So if anyone has anything to add, please just do it because I'm not. I don't see it.
I appreciate that.
So again, this is 1,000 days on a monthly chart of the U.S. 10-year. Here's a double top. That's what you would have been looking at. It takes a lot of conviction to want to break that. It just didn't, and that's okay. It's just a chart, right? So here you fail, and you start to open up, and the move down continues. And it's not till now that we start to revisit it again. So it's almost 2007 since we've been to this level. We'll probably eke up into that neighborhood as the next few months go on, I think. Now, this sounds absolutely mental. I know that. Nobody wants to hear that the 10-year could be 5%. Nobody wants to hear it. I understand that. All I know is that on this monthly chart, we are still bullish. Could we move down? Sure. But I think there are targets above us as that we've shown, right, on all these different time frames that are incredibly relevant. And when you factor in what they actually represent in years, they become for some reason even more relevant. This is not what people want to see, but it's what might be coming, according to the chart. Now, for the last, and I know, Ian, you've probably heard the same thing, in spaces for the last year or so, you've heard certain people think that you're going to have a complete and total capitulation, or the 10 years is going to go through the roof. Most people want to say, or the narrative is that it's down, right? The president wants it down. I get it. But the chart says it still wants to go up, at least on this time frame.
That's exactly what I was going to say. It doesn't matter what the president says. It's what the chart tells you.
Yeah. Someone needs to tell him that, but... right? But
Yeah.
Right? But the chart, to your point, is exactly accurate, right? The chart is telling us we're still in a bullish trend, and we have some targets above. We have that double top touch. We have this touch. Yeah, there's something going on here. I don't think we can ignore it. Right? Which puts all of this in one big giant blender, and then you look at something like the Dow, or anything else for that matter, and look at SPX, just for the heck of it. Right, the thing's just it's out of its mind. Right, these markers are from the weekly, I believe, but this is the monthly. The Dow too, okay, great example of what we just talked about. Right, there's the rollover. Right, there's your tag of the 20, and then here you are double topping the chart. Right? But what are we going to find out here? If this thing's probably going to want to make a new high, let's just all accept it, right? So you make a new high, and eventually you pull back, and everyone's going to go, oh no, here we go again, that's going to be the end of the world, and we're going to roll over, and we were going to go back down to like 30,000. Well, this could simply just be, right, you have a nice move up, retracement back to a continuation off the 20, you gas up, you take out the previous wave's high, now we're into a little bit of price exploration, but eventually you'll fade those highs a little, you'll come back to test the T line and the 5 EMA, just like in here. And on your test of the 20, because it's not the first test anymore, you have to make sure that it's not going to break, right? But it could simply be a situation where you have this pullback, you move up, you go on another run, you have another pullback, which is another continuation off the 20, just like we've showed on other charts. Do I think this is reasonable? Absolutely not, especially with whatever's going on at the world at any given time. But that's where we are, right? The fact of the matter is, on this monthly chart, did you get a sell signal anywhere in here since November of 23? No. Even on this big pullback. This candle, even though it basically took us from 42 all the way down to 36, it wasn't momentous enough to drag the 5 EMA down through the T line to trigger a sell signal in a new wave. It just snapped back. That's the reality. Like, look, there's no break here. Take your candles off if you need to get another look, right? There's no break here, right? If you would have taken a short like we showed before, you just have to be aware that it's not confirmed, have a tight stop, and be prepared to wash it, right? Any time frame doesn't matter. This just happens to be the monthly. But you didn't.
And if you were,
yeah, the candle that came here didn't pull it down.
right. I was looking at that red wick all the way down. You're right. If it didn't have the sell, in the event you got stopped out on a long, after it closes above the 20, that gives you confirmation that it's still in a bullish run. Does that sound right?
Yeah. So, yeah, and here's another, like, we're always
I just
wondering what's going to be
It
next.
just helps me say it over to help me learn it a little bit. Sorry.
We're going to, don't worry, we're going to rinse and repeat this thing a million times. That's the only way we really learn, right? So
Sure.
I just switched my chart to YM, which is the contract for the Dow chart that we were looking at. The reason I did that is because it lets me use the volume profile. And what I want to show you is, because you got to know where you are. Like, look, if you're playing sports, is it not kind of important to know where you are on the field, on the rink, on the diamond, on the court at any given time? It kind of is, right? Like, you don't want to be the tennis player that's just happy to be on asphalt and then realize you're in the friggin' parking lot, right? Like, that's not going to help you. You have to know where you are on the chart.
Yeah.
When we throw the volume profile up on this monthly, which I know it's a long term, what do we know? Well, we know the chart is telling us that this is the upper value range and that we're kind of trading in that area that we'll consider a premium. And we know that the volume profile is way the heck down here.
That's kind of scary.
It is kind of scary. Why is it scary? It gets scary because when you go parabolic and you fan out, when price goes just basically straight up, it fans out your major moving averages.
Mm-hmm.
And, you know, in the event of a breakdown, you're just looking for levels. That's all. This could be a 5-minute chart. Doesn't matter, right? Because we're just looking for levels. So, but on this Dow chart, probably going to take out the previous wave's high. That's what we're looking. That's what our expectation is. Right? Move up, retracement. You pop. You look out to you look to take out the previous wave's high. That's what it's doing. Is it doing it in an area of where you kind of got one eye open and all that stuff? Yeah. Nothing goes straight up forever. And I, you know, Butters, I don't know about you, but there was a time when I kind of looked at this market and went, okay, it's super hot. They're going to continue to run it hot. And when we do get that moment in time, that day of reckoning, when it starts to unwind, it's going to be of a certain severity. Now I'm starting to feel like that certain severity just kind of feels like it's escalating to me.
Mm-hmm.
You know,
I would agree.
like the longer that we stay up here and continue to push these new highs, this is SPY, I get a little spooked because, you know, does 380 sound reasonable? No. But You know, that's where the upper value range is today. Hell, they don't even think 50, you know, they don't think 558 is reasonable even. But eventually, like we showed on every other chart, you start trading in an exuberant way on any time frame, I don't care what it is, above the 20, the 50, and the 200, you have to look over your shoulder because you don't want to get hit by something that you didn't see coming. And we're doing it on the weekly too. $5.76 is basically the 50 and the 20 on the weekly.
That's a different chart.
It's this bi-weekly. Yeah, I went from
Oh,
the
wow.
monthly to the weekly, and you can see that you've taken the high.
Yeah.
Just keep unwinding and working backwards until you start to see that, hey, maybe there's no sign that this thing wants to let up. So I'm pulling my time frames back to try and see if we can find maybe, look, it looks like it wants to fade. There's a certain level here that maybe we're finding some resistance at, but not really seeing it.
Oh, that's a good one.
That's about as,
Look, look.
that's as toppiest as we look, and I don't think I'd be comfortable shorting that chart.
Yeah, not even.
So-
It's still above the 5.
Right, so I don't know about you, Ian, but this thing just like, we do
Yeah,
what we're told.
like it's scary though. Like
It's
you know,
terrifying.
some of the stocks I play, like
do.
I'm at all-time highs. Like well, I know we spoke about this chart last time I was in here. Was look at CLS. Like
Celestica?
yeah, it's unreal.
Yeah.
Is that a crypto or?
No, Celestica is a technology company.
Okay, I see it.
Yeah.
Celeste. Whoa. Okay.
Let's look at the weekly because, oh wait. So,
Wow. That looks
So-
like a crypto chart.
okay, it does look like a crypto chart now, doesn't it? So, Celestica was one of these companies that just, I'm not even quite familiar, it's been so long, Ian, why this thing went totally flat. I don't know if it was an acquisition or what happened there, but we talk about how when our averages twist together, you know, whether it's a 5, 15 minute, 4 hour, that when it unwinds in a big way. Well, this is, again, everything is fractal. Here's the same example on a monthly chart. All right, a monthly chart. Look at this monster. There's the point of control. It basically took off from a twist of the POC and every major moving average we have. You got on the 1st of November 22, you get a buy signal at $8, let's say, $8 or $9,
Unreal.
and you're at 160 today. Wow,
Yeah,
like that's a wicked run. And I guess my point is that here's your buy signal back on the 1st of November 2022, and throughout all of this drama, you never got a sell signal. The 5 EMA, even on these big red candles, weren't momentous enough to pull the 5 down through the T line to indicate you might be changing direction. The divergence held, and off you go. This is an example of where if you cheated, you had to be aware that it could reverse at any time because you didn't have a sell signal down, and that's what happened. But look at this thing. It's a great example, Ian.
yeah. I know we looked at it 2 weeks ago when I was here, and it's just been continued to run. And you had commented on that you can see this thing going higher. And 2 weeks ago, and it's gone higher, all-time highs.
Incredible.
That's, you know what? We don't see many stock charts like that, do we? Like, honestly.
No. Another one you can correlate to is IBM. That's another one that's had a wicked move.
This was David Elliott, who I learned from. This was David Elliott's favorite stock to trade at the time.
Yeah.
For some reason, but that was, you know, back in the early 2000s as well. So it was a different chart, but yeah, this thing's had another monster run. It's nice to see these older technology companies actually catch a bid for a change. Perfect example, Ian. So guys, like, I know
Yep.
sometimes it looks like a bit of a rainbow and you've got, all these different colors on the charts, but this is the stuff that really shows well. Consolidation, when you break out of it and your major moving averages start to fan out, you've got the perfect chart to trade. Love this stuff, right? This is what gets me excited. I love the breakout, right off the 50 and off you go.
Because you're looking for the next level, right? That's why you love it. It's
I like it because it's
I
coming out of a long consolidation.
I get
Right.
that, and then I get it how it fans out, which is wonderful.
Yeah. So here you go,
Um,
right? So this is kind of what I mean when you start to break out
okay.
and you get like everything, because your shorter term averages are going to fan out to the upside first, right? Because they're
Sure, yeah.
shorter in time frame. But these charts are beautiful because, okay, so we know we're running hot. We know we're trading above all of those three major moving averages that I talked about. But you kind of know how this is going to unwind, right? You're going to look for a rollover that's going to take you back to the 20 at the least.
Mm.
This one broke it. See
But
all
held on a
this,
50.
right? The divergence to the downside stuck. Right? There's your
Oh
signal.
yeah.
And then it just continues to run. Continuation
And
off
it's
the
like
20.
textbook.
Continuation off
That's
the 20. Yeah, like
textbook entries.
that's, yeah. So,
Yeah, it's just finding them. That's the key, right? Like I can tell you
yeah.
another one.
Sure.
Blunt, it is BKSY.
Mm-hmm.
Okay, that's fine.
Black sky. Oh, this is a nice chart, yeah. So let's go to the daily.
Oh, look at that
So,
consolidation.
yeah, like, I don't know what happened here to have it fall off a cliff, but that doesn't really matter because we're traders, right? Like, as a trader,
Or
this doesn't bother you, right? As a trader, this excites you. As an investor, you're losing your shit, right? I get it. And that's why there's a little bit of a difference.
it's
But
a for sure short. Yes, yes.
this thing, it's probably the weekly will be a better.
I
Take some of
saw
that
the way on
noise.
the right. It's looking like it's gonna retest. This is interesting. Yeah.
That's great. Like, your weekly, you failed a 50, that's the ice, right? That for me is
Yeah.
kind of a tell, but you actually had your signal way back here on the week of the 4th of October. Yeah, a little pullback higher, but it failed the 50 and then it was a nightmare from there. Look at what happens. That divergence shows up and it's night night. But eventually, and we show this in crypto charts all the time, right, where something's new and it just goes nowhere but up, and then all of a sudden it just bottoms. And that's kind of what's happened here with this stock. But eventually, like I've said before, they pop. Sooner or later it'll pop. Not all the time, but if it's worth its weight, it will. Where does this thing
Bounced off of
test?
the 50 twice.
Yeah.
There you
So,
go.
it's hits the upper value range, pulled right back, and what you're testing again, the upper value range. Right. What's encouraging about this move, so what would you be looking at here? Right. You've got your 200 MA above you on this weekly chart, but you didn't test it, right? You did not test it. This one you do. So do you remember when Carpathia was in here? The first mouse gets the squeeze, that second mouse gets the cheese. Took a run at the 20, the 200 got nowhere near it. This is the one, the second mouse is the one that broke through.
Okay.
Right?
I follow you.
It's those second attempts, kind of the ones that can break through. Now where this can go to the upside, well, let's just kind of use the rules, right? We're going to be looking to take out the previous wave's high. So if we look at this chart, I'll just back this up a little bit because I'm going to need the space. Where does that leave us?
The green wick.
How about this? I don't know, Ian. Like, I know I'm
Oh yeah.
stretching a little bit here, but I think you got to start to test that level again. Like, at some point,
Yeah, I
current
would
pri-
agree.
current price will revisit past, and there's a lot up here. Like, and it's relevant because it's where it fell off, so it's going to start to work its way through this stuff. Jeez, if without
That's
looking
where I
at the
was looking
chart,
at with that cursor there.
without looking at the chart, and you're almost going, geez, maybe it's too late here. But when you see it on the weekly, you go, I don't think so. Here's the monthly. Why is it relevant? Because this is our first attempt at the 50, right? So first attempts typically fail or get some resistance on the way up. And okay, if that was to happen here, and we do get some resistance and price has to pull back a little bit to take another run, is it reasonable to think that it would come back to test the 5 EMA and or the T line? Yeah. But if it's to hold them and this divergence stays intact over the longer time frames, what's that tell us? It tells us that the trend is still intact. We are still working under a buy signal. And when we look at this monthly, there's another look at some past price that we might want to take a run at. And on the monthly, what do we have to get by? We got to get by this.
Yeah.
Up in here. Get by that, and then it's got some clear sailing.
That support
great
and
example,
the
Ian.
resistance level.
Yeah.
Yeah.
Yeah, that's a great example, Ian. And on the daily,
That the 1,000.
did you know this when you mentioned this to me?
Yes.
So, you can't. You're thinking, when is he going to get to the daily? So here you go. Like, there's 1,000 days, right? 4 years, right here.
Whoa.
Right. So this is why, back after oil crashed, there was a period of time on its daily chart that it did something similar to this, right? Where it's just hit its head, hit its head, hit its head, hit its head. And I didn't have, when I first noticed it, I didn't have the 1,000 MA on my chart. And when I flicked it on, I went, oh, okay.
That's
Now I see
why.
it. Yeah, and when it broke, it exploded, right? So this is kind of reminds me of that chart a little bit, because you're banging your head on 1,000 MAs, which is, it's a lot of price history. It's 4 years. You're breaking out of 4 years, and you're doing it in a hurry.
Staying above the T line the whole time.
Yeah. So,
Wow.
great pickup, and I love, this consolidation. Like we tell you, we don't want you to don't trade the chop. We want you to trade the breakouts like this and the breakdowns. And once
I
you're
have to
in
do a
them,
better job with that. Yeah.
and once you're in them, and believe me, if you get into something like on the longer time frame, and you get an opportunity to feel what it's like to watch something run like this and just follow the chart, you're not going to know what to do with yourself. You're going to drive yourself crazy because you're going to think, literally, you're going to think, oh God, I got to sell. This is getting boring. I got to sell. I got that. When really, you should be celebrating, right? So you'll pick
Yeah,
up
it's
things
strange,
like
isn't it?
this on the shorter time frames for, like, if you want to get into a daily like this, hey, look for an entry off the 1 or 4 hour. You might pick something up a little bit early, so that you is. The one that is will have a different rationale on why they make the trade they make, just because they know what it is and what it represents.
4 years of history.
Yeah. Yeah. Let's look at USD JPY because it's getting a little bit of a bid today. Right? And I have some opinions on this too. Let's take some noise off just for a moment. Just going to leave the longer term stuff on here for now. So why is this important? The USD JPY chart. It's
Safety
important.
trade.
Well, it's the carry trade, right? That's,
Oh, sorry.
and the carry trade is what? Well, when you can borrow money for zero, was what the Japanese could do. So if you borrow $1 million for zero, and then you take that money and you could buy treasuries with it, or you could buy an index with it, you could buy whatever you want. But your return is going to be a heck of a lot more than zero. 5%, 10%, whatever, wherever the money is. And that works as long as Japanese rates are super low or zero, and the rates here are higher.
Until that.
But now that spread's kind of closed, right?
Mm-hmm.
And that's when they say that so what happens when that unwinds? Well, it means that the Japanese can now take their money and put it in Japan and get some return for it for the first time in a very, very long time. So what do? They sell their US assets, right? Or the dollar, that's as an example.
Okay.
That type of thing. So this is kind of a real sticky area that nobody wants to talk about. Nobody wants to talk about the pace at which the dollar's falling. Nobody wants to talk about foreign direct investment. Because those two things combined, when they fall, are not good. And then the rest of the math doesn't work. That's just my opinion. And if the carry trade unwinds and the selling continues, right, this is just an example of where things could go. And I'm simply using, this is just a weekly chart and just our script and some levels. This 140 spot 8 level is structural, right? You can see all the contact that's been made at this level going back years on this chart.
Nice report.
Okay? So that's the structural level. The point of control is basically in and around where we're trading now.
Nice.
All right? At least this week we've traded below it and above it. We're still trading under a sell signal. And, this is another example of where, hey, it looks like this is the buying opportunity, right? We've had our big move down. Now we've gone sideways. I'm starting to think we're moving up. And maybe we are, right? Maybe we are. Maybe the next wave is higher. However,
We never crossed.
we don't have any confirmation as of yet. And we're basically doing that sideways thing that we showed many times today. So the fear would be, or the concern would be, or the downside risk is that here's your move down, and we kind of have our failed breakout that rolls, and when it rolls, it takes out the previous wave's low. On the upside, it takes out the previous wave's high. On the downside, it takes out the previous wave's low. That would be your target. That puts us down into that close to that 140 range again. This is the lower value range, which has been in play in the past several times. That's 136 or so, 136.7. And look, I can't help but identify this level here. So you'll see me draw lines to try and identify levels in and around the 5 EMA and or the T line and benches of past price. That's what this is.
Is that what
right?
the bench at past price? Okay.
Yes, that's
That blue line?
basically, this is where I think it wants to go. If it continues to fail, this is the downside risk to me.
Yeah, if
This-
it fails the lower value range.
Yeah.
Gotcha.
This creates a bench here, not a big one, but it is what it is. Pick up the wick from this week of Monday, August 1st, 2022. It runs right along, like literally kisses the 5 EMA on the weekly, runs right underneath these two candles, these two skis. I've showed you what this means on a weekly chart with oil, right? This kind of thing. This is, let me just, keep that there. If we roll back, so pick up this wick, run right along the 5 EMA and pick up the bottom of these two candles in this wick. I'm just leaving it here. We'll see what happens. But I don't feel good about it running up to try and make new highs because, look, we do this all the time. Let's leave it here.
If you don't mind, I have a super beginner question.
Of course.
In the event that this does, break levels and continue to go down, let's say all the way to that blue bench level, what would that look like for the dollar or the one? I mean, one increases, one decreases, right? So would
Yeah.
the yen decrease
I
then?
think, well, the yen is strengthening, right? So if this falls, it means the yen is strengthening.
Oh, I had it backwards. Okay.
So-
Oh yeah, and that makes sense because you said that also the DXY is
So
okay.
if the US dollar falls against the Japanese yen, in other words, the yen gets stronger, the US dollar gets weaker, right? That's showing you this chart getting weaker, which is the US dollar side. So do we have a lower top? Yeah, we do. Right? Just one of the little things that we identify when we're looking for trend. Right? So lower top. What's interesting is that how price continues to catch this level, right? So that's why it's relevant to me, right? And structural. So look, can you get a move up here and start to test this level? Absolutely. Like all of this is, but the question becomes, do you make a lower high? Let's say you do bounce up here and everyone gets, oh boy, here we go. Then this dollar's getting stronger. But as all that happened is that
It's a fake out.
fail. Exactly. Right? You just make a lower high. Or, you do it here like oil did, right? Let's be an equal opportunity chartist. So weekly USD JPY, weekly oil. See what I mean?
All lower high. Oh, that one did.
Right. So this is what happens with the volume profile, but
Yeah.
same kind of thing. So we're just following the chart, right? The opinions that we have and how we get here and why, they're not really relevant. Mine included. They're not really relevant. It's all it is the price on the chart. That's it.
Yeah.
All right. Any other questions, guys?
I have a comment. I think it's awesome with the candles and looking at these 5 and 8 lines.
Mm-hmm.
I don't know if you've seen it. I did like to put the body candle. You can actually make that transparent
Sure.
and just have the outline. So that's kind of
Yeah. Use the hollow candles.
that's right.
Yeah.
That's super helpful too.
Yeah, no, listen, whatever makes the chart easier for you to read, right? The hollow candles are great because actually you can see your T line and 5 EMA maybe a little more clearly, right? So, but whatever view works for you, you go for that,
Yeah.
right? Quick, this is United Health, all right? The weekly chart of United Health does not like the upper value range. Right? So in other words, nobody was willing to take this thing past 620. Right? Nobody wanted to walk across the gym floor to try and make it 650. Right? And what did it do? It faded. Now, there is some volatility to this stock, absolutely. But the way that we read it doesn't change. So I was asked, where do I see this thing going? My response was 268.58. What was that? It was this. Right? See?
Past
price. See? Just connecting. That's all I'm doing. Now, shortly after that, a couple days, it did this, which that was not expected. However, it hit it simply because this area was vulnerable to be tagged. Why?
Yeah.
Because current price was looking for something to grab onto.
Past price.
Couldn't hang on to the 500 on the weekly. Couldn't do that. Couldn't hang on to 10 years, right? This is 10 years. It split it like it didn't exist.
Oh yeah, it did.
Okay. So it's like, you remember watching the Roadrunner and all that stuff,
Oh yeah.
right? And when Wile E. Coyote falls off the cliff, if he's lucky, he catches his pants on a stick that's off the hanging off the cliff.
Yeah.
Well, that's what this is. What is it looking to sit on? It's looking to sit on some past price. It's the only thing that it can catch its suspenders on to keep it from falling down. Here's the bad news.
Mm.
It's gone nowhere. Right? So, giant dagger down, spreads this out. This divergence means momentum, right? And you finally feel like, the worst is over. But look what's happening. You're not breaking.
You're not
with
moving.
any effort whatsoever. You're going nowhere, right? Yes, today.
It's been breaking the 5.
No, you can't. So that's bearish, right? Just like when price moved up and then went
Sure.
sideways, it was bullish. Well, here's
Right.
price moving down and sideways. That's bearish, right? Where do I really think this is going? I really think it wants to the 1000 MA weekly, which is 20 years of price history. Why do I believe it wants that? Well, because it just coincidentally lines up perfectly with my next level, which was this bench in here and then
Another
tagging
bench.
the wick and that base of that candle. That's all. Nothing really, really, really super scientific about it, right? I don't want you guys thinking that I went to MIT because I couldn't get in. I couldn't find the front door. Right? This
Past price is just as important. That's what I'm picking up. Like,
current price revisits past. The way price behaves is important. You have a big move down and then sideways to go nowhere, and you test and fail these two levels. That's not good. So now I just wait for this failed breakout to roll over and take out this previous wave's low, which probably will make it test down here again. Right? We're not doing anything that's overly complicated. It's just understanding the rules that we use and how to apply them. Right? All of these videos are on FEG's YouTube site. They're on my YouTube site. They're obviously on Twitter as well, on my on my page. So they're there for you guys to use them. Like, refer back, right? That's why they're there. Anything else you guys want to look at today?
can I ask for one crypto one?
Good anyway.
Sure.
DMC?
I'm sorry,
DMC?
DMC.
Yeah.
Okay. DMC Holdings Weekly. All right. So you've had some support here off the weekly, 500 MA, which is what? 10 years. Right? So you got a bid off of 10 years. That's good. Right? What are you looking to do? You want to take this previous wave's high.
Oh, I'm sorry. Is that
Wrong
that
chart.
is DMC, but yeah, it must be because it's not gonna have that much.
So there's the daily. I had the weekly up.
It's a DeLorean token. It looks
it's
like
a
it's on the
token?
SWU network. Yeah, I'm sorry. I don't know if I said crypto or not.
DeLorean Labs? Is that it?
Yes.
Okay. Oh, okay. That's
Yeah.
so now we got to shorten our time frame up here because we don't have a lot of price history. Here's what we do have, though. Interesting. All right. So there's your resistance. It's the 500 MA on the 15-minute.
And am I looking at 3 moving averages? The 5, the 8, and the 20 are all together, or is it just the 2?
No, that's the 500. That's the 5 and the 8. That's all.
Okay.
Yeah.
Gotcha.
So look, right now, this thing is in a downtrend, as you can see, and there's no reason to long it. Not yet.
We got the lower value range. Any support before. Interesting.
Just keep, you don't have a lot of price history here, so you're gonna have to move your time
Yeah.
frames around, but, here's the 30-minute, same thing. I think the lower value range is gonna be the upside target because, that'll be your previous wave's high up here, so.
Yeah.
If it reverses, that's what you wanna see.
Yeah,
Mike?
wait for confirmation.
Yeah. Mike, I heard you in the background there. What do you want me to look at?
Oh no, I've been going. I'm just
You're
keeping
good?
an eye
Okay.
on. Yeah, I'm good. I was gonna say thank you for that. Trading journal.
Oh, you're very welcome.
Um, yeah, it was actually a massive help. So appreciate that.
Well, excellent. So what Mike's talking about is there's a trading journal document that I've put together. Um, the people in my Telegram have access to it. If anybody would like it, you can message me, and I'm happy to send it to you. You can message me on Twitter. If you'd like an invite to the Telegram, which is free, you can just mention that, and I'll make sure you get that as well. Okay, but the trading journal is very important. I'm glad you're using it because when we run into issues that, let's say we're stumbling, we're having a great run, everything's going well, you're making money, you're using your stops, you're protecting and mitigating your risk, and all of a sudden it feels like you fell down the stairs and nothing that you can do is right. Like, those times will happen. And when they do, it's really important not to lose your shit. Okay? It's really important not to overtrade. It's really important not to get frustrated. And I'm speaking from experience. I do the same thing. Right? So, how do you avoid that? Well, sometimes taking a step back is like taking 10 steps forward. And if you document, and Ian, our friend Troy, is really good at this. If you document every trade you make, from where you entered it, why you entered it, what time frame you entered it on, what your expected exit was, and so on and so on and so on, when you actually have one of those moments in time that feel like you've fallen down the stairs, the first thing you should do is head to that trading journal that you've diligently filled out for days, weeks, months, years, however long you've been trading. And what you'll find is that it will slow your mind down. It will distract you, because all you're going to be focused on is what you did wrong and why you're not making money. It will distract you from that mindset, and it will refocus you on the things that historically have worked, because you've documented it. So if you would like the journal, it's there for anyone who would like it. Just message me, and I'd be happy to send it to you. Okay.
Yeah, I greatly recommend people get it because
Thanks, Mike.
falling back to what you said, um, it reminded me because how we spoke about Heikenashis, I think it was the other
Uh-huh.
week, and like I said, when I first started utilizing Heikenashis to just keep on track of the trends was
Mhm.
good, and then I fell off the track, but going back into it, yeah, I read into my journal, I'm like, right, this trade worked out well, there was a difference.
Excellent. No, I'm glad
So yeah,
I'm glad you're using it first off, and I'm glad it's helping. So,
yeah,
and
guys, get on it,
yeah,
get on it. Don't sleep in the trading journal.
and just to demonstrate today, what are we using on our charts? Just one last thing is that what we've shown today is just using the our indicator script, which gives us the buy and sell signals. It gives us, I think, 9 moving averages, and you can use everything from, because what I want you to be able to do is trade the system that I teach you, but I also understand that not everybody has access to the number of indicators we need to do it right. And in order to do it right, and because I believe in fractals, I use those longer time frame indicators all the time because they provide me ranges on shorter time frames. So I'm using up to 9, like a 5 and a T line, 5 EMA and a T line, and then 20, 50, 100, 200, 500, and 1,000. That's a lot of indicators for you to put on a TradingView chart. So I've built in all of those moving averages, the signals that you get, the buy and sell signals, the 5 EMA that will, in this case, change color when it senses the fade. It turns from white to red and then vice versa, and a volume profile, all within one indicator.
That's awesome.
Right, so if you guys would like to, it's a subscription. If you'd like to talk to me about that, just send me a message as well and get you hooked up. But it makes it possible for you to trade the system and not having to spend $300 a month in a subscription plan or something. So it's a bit of a workaround. But to your point about this chart, like what did we just talk about? If it starts to fail, it's going to roll. It's going to continue to roll and look to take out the previous wave's low, and it's getting a little heavy as we look at it. So, all right. But I won't take up any more time today, guys. I know it's been a little longer than normal, but I want to thank everybody for coming in, and I appreciate your questions. Ian, it's glad to have you here. I love having you in. And we will catch up on Tuesday of next week, and happy 4th of July to all our friends. So have a good day, everybody, and remember that I'm just a short message away if you want to reach out about any of these things, the trading journal, the script we use, any of that stuff. Have a good day, and I will see you later. Take care, guys.
Thank you very much.